Good afternoon, everyone. Welcome on this fabulous Friday afternoon. Thank you for joining us at 2 o'clock. School finance officials are probably the only ones that work till 5 o'clock anyway. So thank you for joining and having some fun with us this afternoon as we talk about everyone's favorite subject, Qasimyar. And this is something we've been discussing since last fiscal year. It started probably about this time last year. And we're going to see it through to its finale. And we're going to work with you today on closing that out, what that looks like, reconciling refunds and revenues. But before we get started, we've got four wonderful presenters here today, three wonderful and myself. And so just so you know who your presenters are going to be, we have two itinerant business managers from Maricopa County School Superintendent's Office, Megan Quayle and
Hi.
Annette Moreno.
Mhm.
They've worked with many of you in the past and are here for anyone who needs assistance. Rounding out our panel this afternoon is the well-known, well-versed Karen Smith.
Hello, everybody.
And I think I know most of you, but if you don't, my name is Heather Mock, and I too am from Maricopa County School Superintendent's Office as Assistant Superintendent. And a lot of the front-end information from Qasimyar came from me. Now, one of the guides or documents that we did send out, Dr. Chuck Essig sent it out for us, and we did send out a memo with instructions on kind of what this process was going to look like much earlier in the school year. And so this is just a follow-up with that so that we can give you some visuals and be able to answer questions should you still have them. And with that, Karen, if you will, I get to take you into the past today. We're going to start with the history of the Qasimyar class action lawsuit and kind of how we got here. And thank you for using the chat. You can put questions in chat, and I was going to tell you in the Q&A. Francis, the question was, the memo. Yes, we can send out the memo again. And we're going to have a link later in the presentation to a lot of handouts. It will include the memo. There are many handouts here today, plus some final values on what the refunds, the total dollar value. And so we have a lot of resources for you. But now, moving to the past, getting in our time machine, we're going to go back to 2015 and net assessed value, everyone's favorite Friday topic. What happens is when you change every year, right? You all have seen your personal home property. You get your new property value from the treasurer's office. You look at what your limited property value is and the increase. That increase is based on one or two different rules, depending on how the property was, at least for most of our residential, for that, how that property was used during the year. Typically, I've been in my house for 8 years. So from year to year to year, rule A is used for my property because it's been unchanged. It's a single family, no change in use. And so by constitution, my property value cannot increase for more than 5% each year, and it can never exceed that full cash value. Rule B is for properties that are a change in use. Change in use is, let's say, a dirt lot going into construction or something similar to that. Now, the crux of the issue is that between a type 3 or class 3 and a class 4 property, statute used to say that that was a change in use. Karen, if we go to the next slide, we can see a little better what that looks like. And so what happened was from 2015 to 2023, interpretation of statute, which happens all the time, any properties that went from class 3 to class 4 or class 4 to back 3, so back to class 3, owner occupied for class 4 residential, the rule was applied as if they're all still single family homes. And so the interpretation was that was not a change in use. And so that rule A was applied to those properties. Statute actually said that it should be a change of use, and the other increase in property value, that rule B for increasing the property value from year to year should have been applied. And for the majority of homes in that case, it would have actually been a lower property value than what their net assessed value came out to be. And if you've worked with looked at your own property values and tax rates, or your district's tax rates, you'll know that increase in net assessed value typically means, right, you're paying more taxes. There was a Dr. Qasimyar, filed a class action lawsuit. I think he actually filed it in either 2016 or 2017, so pretty early on. He said, no, you're applying rule A, and you should be applying rule B. And through rulings and appeals, the courts did finally rule in favor of Dr. Qasimyar. Now, what's a little bit unique about this, it was a class action lawsuit. Most class action lawsuits, maybe you've received a flyer in the mail that says, hey, I don't know, the ones we've seen lately is your data was compromised, fill out this form, and if the lawsuit's settled, you'll get your $10. This lawsuit was different. The way this class action lawsuit ran was that every property that qualified and that had that improper rule as part of the change in their net assessed value for that time period, they were in the lawsuit. You didn't opt in, you opted out. And so the remedy is that for any one of those, and it's millions of parcels, any one of those taxpayers who paid more to all of their taxing districts from 2015 to 23, the taxing districts had to give that money back. And so there had to be a calculation of what the net assessed value should have been and a recalculation of what it was to give them the difference and get the taxpayers a refund. Now, some taxpayers, it was reverse. And if they didn't pay as many taxes as they should have, those were held harmless. And so if I paid 10 but should have paid 20, I still got to pay 10. Lucky me, but starting in tax year 24, I was going to have to pay the correct rate. In case you're wondering, the statute has been changed. And so the designation of going from a class 3 to a class 4 is no longer considered a change in use. And so the practice that at the assessor's office continues to be the same, but it just means that there are no further resolutions or repayments from this particular issue that are going to occur in the future. Karen, can we go to the next slide and we'll take a look at, remind ourselves what that meant for school districts and taxing districts. It wasn't just school districts. School districts happened to just be one of the largest taxing districts for the county. And so the county treasurer's office was required to process all of those taxpayer refunds in fiscal year 25 for those negatively impacted taxpayers. Now, they could have waited longer to process the refunds, but it was an 8% annual interest rate accrued monthly. And so the total amount was estimated about $333 million. So the county, on all of the taxing districts' behalves, had a vested interest in getting those refunds paid quickly. And according to the Maricopa County Treasurer's Office, they actually had all of them processed by Thanksgiving. We'll talk later about what that looks like on your account, on your reports and your accounts. But some questions that came early on is, where are those refunds going to come from? Some of those tax dollars went into my debt service fund. Some were M&O overrides. Some were capital overrides. Some were DSEG. And the initial thought was all of those are going to come out of the original fund where the taxes were placed. At the bottom there, you'll see some legislation that came across that made sure that that didn't happen. All of the refunds, even though you can see where the tax originated, were processed out of your M&O fund. And so that way the cash was all coming from one place and your debt service accounts were not in jeopardy of not being able to make your debt service payments for the fiscal year 25. But still, that left districts in a bit of a lurch. Many districts needed cash strategies to be able to manage their cash and continue to operate the district for the fiscal year 25. And so we had a couple options. There's a third option that's not on here, but that really only applied to Scottsdale. But you could levy or you could use inaccessible cash. And that legislation also required state aid recalculation. Typically, it's not required. A state aid recalculation can be requested by a district, but it was House Bill 2909 and Senate Bill 1747 said, yeah, no, state. In this case, it's a lot of dollars you're going to recalculate. And good thing they did, because it was about 45% of the total school district judgments that it was $153 million of those $333 million refunds came from school districts. Thankfully, 45% of that, or $69 million, was state aid recalculation. So it wasn't coming from your local cash source. Well, it was coming from your local cash source, but it was being replaced by your state aid. You had the ability to use inaccessible cash, and about 38% of the total refunds did come from inaccessible cash. About 17% or 25.5 million came from additional levies, which seems like a lot, but actually it was less than $1.50 for the county as a whole was levied to help offset all of these refunds. And with that, I'm going to turn it over with, this is kind of where I left it off, and Annette and Megan picked up after this and helping the districts manage these refunds and what they look like at the treasurer. Ladies?
Okay, thank you, Heather. It's my turn. Are you able to hear me okay? Okay. So, okay, I'm going to go through the various reports where you are going to find the amounts that will need to be journaled or, moved around, reclassified, basically reclassifying revenues, which Karen's going to go over later. So we'll go ahead and move to the next slide. So the first report that you're going to want to pull is at the Treasurer's Agency web. Their system for all the revenues and all of your transactions that they're posting for you. So we'll go to the agency web site. The address is there in the instructions. You're going to go to the dashboard, and we're going to, the next few slides are just going to give you print screens of what that looks like. And so you just go to the dashboard, so reports tab, and you're going to go look at the fiscal year, the current year. You're going to go to the revenues, and we're going to search in the object code summary for your district. And print those reports for your documentation for any journal entries that you're going to be doing. So let's go on to the next slide. So like I said, you're going to go to the agency web, the treasurer's site, and you're going to click on the reports. And this is a snippet of what that folder for your FY25 looks like, and you're going to go to the revenues folder. And next, and the report that you're pulling is the object code summary. Click on there, and then it will pull up the PDF file. You'll do a Control F, and you'll find your district by name or by your TAF number. Also, we wanted to clarify that you will pull this report as of June 30. That will capture, and we'll show you in a minute, that will capture, the year-to-date transactions that they have posted for you. Okay, we're going to move on. This is just the account code crosswalk. We thought it was important for you to know. These are all the object codes at the treasurer where they are posting those payments. And you'll notice there's highlights where you can identify what the source fund was really for those refunds. So in the description, you can see in this example that they have one for 610, 20, 700, and so forth. So you would be able to identify those if you needed to, but it's really not necessary. They pulled all the payments right from the your M&O Fund 001. So you can, the other thing we wanted to mention is that the county hosted districts were posting your revenues, and we'll go over that crosswalk in a minute, but it's really important for the pilot districts out there. accounting responsibility districts that you're pulling these reports, make sure that you know and identify the object code where you're posting those payments to. So that's really important for when you're doing your journal entries. Okay, we're ready to move on. So this is an example of an object code summary report. This is for the Wickenburg School District. Of course, please remember to pull this as of June 30. So this is where you're going to find the year-to-date payments that were made. They have been identified by the object code at the treasurer. And for our districts, we're posting to district object code 1111. If it's treasurer codes 3115 and 3116. And in a minute, I'll show you a district with DSEG. That's also the same object code 1111. And then if you have voter overrides, you'll see separate lines for those transactions. And that's under treasurer code 613162, 3163. Of course, we're posting those to district object code 1112. So these are the numbers you're going to be looking for in order to complete your journal entry. And we'll go on to the next one. So this is Tempe Elementary, and they have DSAG monies. So they have additional treasurer object codes 3171 down at the bottom, 3172. That's where you're going to find any of the payments that in regards to DSEG funding. Okay, and they are posted to district object 1111 for the county hosted districts that we post revenue for. Okay. Okay, on to the BSA 64 report, which is found at the school finance reports page. So there's just there's a link there in this slide, and you want to go download that. It will identify the amount of state aid. And so there is a snippet of Wickenburg's BSA 64. You can clearly identify the Qasimyar state aid payment there under your payment adjustment amount column. And you should be going into your system and identifying that payment in your transaction detail for the object code 3110. And it should be very clear that it's posted there. And again, that's documentation for the journal entry that you'll be doing at the end of the school year. Okay. The next report you'll want to pull is your tax rate calculation. Again, we're looking at Wickenburg. And they actually had a tax levy when they calculated the tax rate. And so that is clearly identified on this final primary tax rate page. And it's labeled Qasimyar Class Action Lawsuit Judgment. And the amount theirs is $429,354, clearly identified, and the tax rate that's associated with that. So again, you'll use that amount when we're ready to do the journal entry at the end of the year. And finally, is that all? Okay. If there aren't any questions, we'll move on and let Karen take over.
Okay, thanks, Annette. So now that Annette has shown you all of the different reports and all the different sources of information, and you understand kind of the premise based off of what Heather shared with you as to why we're looking at what we're looking at. When Heather started off, she shared with you that the county was posting all of these refunds as negative revenue. Well, we don't want to leave all of that negative revenue on our GL. So what we've identified for you, and we walked through this on the original guidance document that was sent out back in the fall. But now what we're going to do is walk you through how to actually record these journal entries for year end. So we're a little bit ahead of the game right now. You're not going to go in and post those journal entries right now. You're going to wait until after your county reports get published for June 30th. So if you want to watch some fireworks and post journal entries, you can do it then, but you're going to want to do this before you close out the year, before you file your AFR and you finalize your general ledger, but not before June 30th, because you want to make sure those reports are provided to you. So why do we need to do these journal entries? So right now we have negative revenue sitting in our property taxes, and we want to offset that negative revenue with the state aid that was appropriated to our school district. So this would be applicable for any school districts that were eligible for state aid from that period of time. So from 2015 through 2023, if they were eligible for state aid, then there was a recalculation to provide them the additional state aid that they would have earned in those years when the judgment was applicable for. So for districts that have state aid, we're going to be offsetting part of that negative revenue against state aid. If a school district levied for that potential deficit cash or that negative revenue, though not all school districts did, as Heather mentioned, it was a very small amount across the entire county, but probably about, I want to say it was about 15 or 18 school districts that did have somewhat of a levy. So you would pull that property tax report, as Annette mentioned, to be able to determine how much of those revenues are already offsetting amongst themselves. So there's not going to be a journal entry for that property tax revenue because it's coded to the same account code that that negative revenue was coded to. And then the remaining amount, so what's left from that is what districts have identified that they're using their existing cash, or as we fondly refer to it, inaccessible cash, dead cash, whatever terminology you want to use. But we need to move that negative revenue against our beginning fund balance. So what we've identified, what we've put together is we've built a workbook to make this as seamless and as easy for our school districts. So we have a workbook that we've put together. What I'm going to do is I'm going to actually walk you through this journal entry, but as we've gone through and as Annette's walked you through, you need all of those reports that she's just identified. So that's all going to be the source information that you're going to use for this worksheet. So give me a second. I'm going to drag this screen over here. And this will be posted. So as we've talked about, this is going to get posted to the county website so that everybody can download this and be able to utilize this workbook. So it's set up, if you look at the workbook itself, it's set up with multiple tabs. If you look across the bottom, there are multiple tabs going across the bottom. 3 of those tabs are resource documents. You're actually only going to enter information into the first tab, but the other tabs are meant to be resources for you so that you can easily identify what your journal entries are going to be. So we've identified this input worksheet, and I've made this, nice and pretty. So if you need to go print it, it all prints to 1 page. So if you want to use that as part of your backup for your journal entries, we have it formatted in a nice, easy way to understand. We've also formatted in such a way with a little legend here down at the bottom as to which cells you're going to actually enter numbers into. So we're going to start with identifying the Qasimyar liability. We all pronounce it differently. Quasimodo, Qasimyar. We've probably used a couple other terms for it over time as well, but we'll keep it PG this Friday afternoon. So we'll start with what our liability is. So I'm going to walk you through this workbook, and then I'm going to actually use, since we've been, showing you with some example reports, I'm actually going to pull in some example numbers to show you how this actually will calculate through. So we start with the liability. Then we're going to identify the revenues that are coming from the Maricopa County Treasurer report. So the report that Annette just walked you through, based off of the Maricopa County Treasurer object codes. So these object codes are not the district object codes. These are the County Treasurer object codes. So we're going to pull those values right off of the County Treasurer report. Then what we're going to do is we're going to verify that we actually have those negative revenues in our general ledger. So we're going to then, I've given you the file path for our school ERP Pro users, which is pretty much, I believe now, everybody in the county. So you're going to navigate to general ledger, transaction inquiry, journal detail, and you're going to filter your GL by the M&O fund and your property tax revenue code. So 111 question mark. As Annette mentioned, all of these negative revenues are required to be posted against your M&O fund. When you verify this, you're going to verify this for reasonableness. So I have a little note here that you want to look at this for reasonableness to evaluate and ensure that all of those negative revenues have been posted. The reason why I'm not saying that you're going to tie this out to the penny is because some districts might have additional negative revenues on their GL. There's other reasons that property tax revenues could be refunded. You could have somebody who overpaid property taxes 3 years ago, and they're in the process of getting a refund from the county treasurer's office. I, as an individual homeowner, could challenge my assessment, my assessed valuation, and I could get a refund on my property taxes. So there's multiple different reasons in which you could have negative revenues. So you're going to be looking for this total here that you're going to look to see, is that reasonably close to what you have on your general ledger? You should have at least that, but you might have more than that, is what I'm really getting to. So you're going to want to be looking to ensure that you have that negative revenue recorded on your GL. If you don't have that negative revenue, then you need to go back to your reports and all of your revenue postings and ensure that everything got posted correctly. As we've talked about, the districts that fall under the county superintendent's office, they're recording these for you. And if you're a accounting responsibility district or a pilot district, you're recording these on your own. So if you inadvertently posted it backwards and you posted it as a credit versus a debit, then you might not be in balance. So that's where you want to do a double check to make sure that you have posted this all correctly. Then you're going to pull over your state aid amount. So we have a line here for you to be able to identify from your BSA 64 the amount of the revenue that was distributed to you through the state, through the statewide recalculation, or the assessed valuation recalculation for all of those years. So the state went back starting in 2015 all the way through 2023, recalculated what your state aid should have been in those years based off of this reclassification of the assessed valuations, and gave us all of that additional revenue this year in 2025. And as Annette showed you there, that's very specifically called out on your BSA 64. You're going to verify that that is also in your general ledger. So we've given you the file path again. You're going to go to general ledger, transaction inquiry, journal detail, and you're going to look in your object code for state aid. So 3110. So you'll see that in your general ledger, and you should see it posted there. It's essentially going to be an additional payment because it's shown as an adjustment on your BSA 64. And it should be posted on or around January 23rd. So you're going to be looking for that extra payment that was released in January for that. You're then going to, if applicable, if your district did do a levy, you're going to identify what that levy amount is. So this will not be applicable for everybody. It's only going to be for the districts that did have a levy, and they're going to enter that amount of the levy. Now, we realize that not all property taxes are collected within the same fiscal year. So we typically have about a 3% delinquency rate. But what we're recommending for purposes of this journal entry, that you're going to assume that all of that levy was collected. So it's not separated out on your actual receipts. It's part of your primary tax. So you're not able to distinguish within your property tax receipts how much was actually collected for the deficit cash levy versus how much was not collected for other purposes. So because it's all embedded in your primary property tax, we're going to advise that you assume that all of that levy was collected. And really, it's just so that we can get our journal entries properly posted within the GL. From that, you'll see that these next several fields are not going to have any number that you enter. Rather, it's going to come from these other fields. So from cell B3, the liability is going to come down. We have a formula there to pull that in. From the state aid line, from cell D19, that amount is going to come down. And then from your levy amount, if that was applicable for you, that's going to come down from cell D26. We have a formula there that takes your liability minus your state aid minus your levy, if applicable, to identify what amount your district had intended to use in accessible cash or dead cash. That's going to be the amount that we're going to also journal entry against our fund balance. Once all that information is populated, if you go to the second tab, we've then mapped out what the journal entry will look like for you. And again, these are gray. So you're not going to enter anything into these cells. You're going to allow the formula to pull that information over. So the objective of these two journal entries is to essentially offset that negative revenue with the other revenue sources or the existing cash that we intended to use. The key here, so there's two very important notes about these journal entries. One is that you're going to post these journal entries in FY25, even though the liability occurred in prior years. So we're not going to go back to all of those prior years and offset this. We're going to do all of these entries in FY25. And the journal entry date that you're going to post it is the date that you actually create the journal entry. So if you're doing this while watching fireworks on 4th of July, you're going to date the journal entry on July 4th. If you're going to be doing this on middle of August, when you're doing all your journal entries for cleanup, August 15th, you're going to post the journal entry as of August 15th. So don't backdate the journal entry. Don't try to make your fund balance report look pretty by not having a variance, because if you are using inaccessible cash, that current year journal entry will create a variance on your fund balance report, but not within your general ledger. The other important note is your journal entries will not be hitting cash. So if you notice here, we do not have a cash offset because the cash has already been sent out. The county treasurer sent the cash out on our behalf to refund the million property owners that are out there. So we are not going to hit cash. The cash is already gone. The cash is already out of your general ledger. What we're doing here is we're offsetting that negative revenue that's currently sitting in our property tax account codes against either state aid, if you are a state aid district, or also, and you very well are going to have both of these, both state aid and your beginning fund balance. So we've identified here Maricopa County districts either use 0300. If you're hosted by the county superintendent's office, you use object code 0300 for your beginning fund balance. Some other districts might use 0330. So you want to know what your journal entry, what your account code for your beginning fund balance is within your district general ledger. And you'll see that the second line item on this is your property tax revenues. So I have it split between 1111 and 1112. Because as a district, you're going to determine how much of this was originally recorded in 1111 and how much recorded in 1112. Not super uber important because it will roll up. It does all roll up to your property taxes, but if you had the majority of your negative revenues hit object code 1111, you're likely going to record it then against 1111, or you might do a proportionate split between 1111 and 1112. So what I'd like to do now is just to kind of show you how this workbook is going to work. I'm going to actually walk you through and take you through our example school district. So what I've included here is the additional tabs that have resource information. So I have a tab here that shows all of the final calculations that were provided by Maricopa County Treasurer's Office. So we put that right here in the workbook, so you don't have to go hunting down that spreadsheet somewhere else. We've also provided a listing of what the actual Maricopa County Treasurer refunds were. Now, this is going to be what the refunds will be come June 30th, because there's still a couple that are still trickling in. I think Megan said that she saw some actually just get posted within the last day or two. So you're going to be pulling the amounts off of your reports, but you'll be able to use this to compare to what the county actually reported out on. And then we also have a resource provided by the Department of Ed that has all of the state aid additional apportionments. So you'll be able to see all of the additional apportionments provided by the district, by ADE to each individual school district. So if I come back to our workbook, I'm going to start by grabbing my liability amount. So if I come into this particular cell, and if I just do an equal sign, oops, bear with me a second. My VPN just dropped on me. So if I come to my liability amount and I jump over to the liability cell or the liability tab, I can actually take, if I'm going to use Wittenberg as my example, I can just do an equal sign and grab that dollar amount. So now I have my liability amount. Then if I go to my county treasurer report, so my county treasurer report that shows the revenues that were coming in, I can crosswalk each of these different object codes to the object codes that are on the county treasurer report. So I'm going to grab that and I'm going to type in these dollar amounts. Aligned to the account codes that the county treasurer used. And then for my state aid, I can either go to my state aid report, or as I said, we have that right here on the state aid tab. So unfortunately, the districts aren't listed in the same order. So you got to kind of dig through and find your district. So Wickenburg's right here towards the top. So I'm going to plug that amount in. And as we said, about, 40%, I think, of the school districts in the county did have a levy. So I'm going to take this from my tax rate worksheet. So I have that tax rate worksheet right here. So I have 429,354 is what the district levied for the judgment. So I'm going to add that amount in, 429,354. As you can see, the formula is building out down at the bottom of this worksheet. So the district had intended to use about $200,000 of their existing cash or their inaccessible cash from their fund balance. So now if I go to the journal entry tab, now the journal entry is populated for me. So I'm going to adjust my state aid against my property taxes. So I'm going to do a debit to my state aid. So I'm going to reduce my state aid and I'm going to increase my property taxes. So I'm increasing the property taxes in order to offset that negative revenue. And then for my beginning fund balance, I'm going to decrease my fund balance and I'm going to again increase my property taxes. So we've tried to make this workbook as straightforward and as direct as possible so that you have a very clear guide. The only piece that each individual district will need to determine is how they're going to split their property tax negative revenue. So you're going to want to look at that in comparison to where is the negative revenue actually sitting on your general ledger. So you could do a quick, calculation if you wanted to just do a proportionate amount. In this case, we had, if I look at, quick math here, I've got 800,000 in object code 111, and I have about 80,000 in object code 112. So I could say, okay, I'm going to split this about, 10% to go to object code 1112 and the remainder to go to object code 1111. So that will really be an individual district decision on how you want to split that. So that's the workbook that we've put together for you. As we said, that will be provided. We will be posting this to the county website. So that way all districts will be able to have access to this. Okay, so with this, I think what we want to do at this point, because we were anticipating, either we've already heard some questions about this, or we are anticipating what some of your questions are. We've worked with enough of you all in the many, past years that I think we can probably read some of your minds about what some of these questions might be. So we've populated some questions that I'm going to, I think, Heather, are you going to moderate? I forgot. You're going to ask the questions.
Yes, I'm going to ask the questions and moderate. So I'll ask the questions. We have some up on the screen for you folks. Q&A section of the webinar, please feel free to pop questions in there as well. But let's start with what monies can be used for these Qasimyar refunds.
So Heather, you mentioned earlier in your beginning of the presentation that the legislation that was passed in House Bill 2909 said that the district would have their M&O fund reduced. So our M&O cash is what's being reduced. The district cannot move this to debt service. Now, some districts have their revenues split between M&O and capital, but all of the revenues were pulled from the district M&O cash balances. So you're going to be utilizing your M&O cash. If you need to reclassify some of your capital cash over to M&O, that would be an individual district choice, but all of the monies came from the M&O fund.
Next question. Why didn't the Maricopa County Treasurer's Office issue the property taxes from other levy funds such as unrestricted capital, adjacent ways, or debt service?
So as we mentioned, House Bill 2909 restricted that the county treasurer was to only pull this from the M&O fund. So as we look at this, there's further implications with the debt service fund that actually under state statute, the debt service fund can only be used to pay for debt. So we can only use it to pay for our bond debt and the interest with that bond debt. So we actually could not use the debt service fund for this refund of property taxes.
What should a district do if this refund results in creating negative cash for them?
So in the event that this does create negative cash, maybe the district did not levy for deficit cash prior to, so during the 2025 fiscal year, if the district didn't levy for deficit cash and they're now in a deficit cash situation, or if there were other circumstances that maybe they had other property tax refunds that came out, then this is the time that you should be talking to Heather and her crew. So this is the time that we are going to be starting to plan for our 2026 budgets and our 2026 tax rates. And if you are looking to levy for deficit cash, that has to be approved by the Board of Supervisors before we levy for it. So the Board of Supervisors is required to meet by the third Monday in August. And this deficit levy has to be determined prior to that. So if you're looking at yours and you're starting to do a little walkthrough, and when you post these journal entries in June, you should be having conversations with Heather now about what that process is going to entail, because you do have to prepare a letter to the Board of Supervisors explaining why you want to levy for deficit cash, what generated that deficit cash. And it's, you've got an opportunity here. This is the reason why. So you want to make sure that you are ahead of the game and making sure that you have that Board of Supervisors approval.
Will there be any additional transactions posted by the treasurer related to Qasimyar?
Yes. So as we said, there are some trickle effect of some of the property tax refunds still going out. We saw a couple of small ones here just within the last couple of days. So there are still a small amount. Those amounts are included in the totals that we've provided, but you won't see those hit your reports until your May report and your June report are posted. So you're going to want to make sure that you're pulling your reports based off of June 30th. So once all of the May and June transactions are posted. Additionally, what we're hearing from Maricopa County Treasurer is there are some checks that are being returned as undeliverable. So if I lived in a property, 7 years ago, back when this was being impacted, and I don't live there anymore, and that check is being sent and I'm not there to receive it, and there's no forwarding address on file, those checks are being returned to the county treasurer. Those will eventually stale date. So we all are intimately familiar with how stale date checks work. The one caveat to this is they will stale date a year after the county treasurer issued it. So if they issued it today, May 2nd, they will stale date a year from now, May 2nd, 2026. But because these warrants are being drawn from the county treasurer, they actually have to sit in unclaimed property for one more year, because that tax or that property taxpayer has a year to go back to the treasurer to be able to claim that property, if you will, that cash. So it'll actually be 2 years before we see any of those unclaimed dollars come back to the district. Probably not going to be a lot, but we might see, some of these revenues that were refunded come back to the district eventually. And if so, that will be just like any other stale dated warrant that gets posted to your general ledger.
Are there other judgments that can impact property tax collections and refunds?
There are. So I could file a claim. I could file a appeal to the assessor's office, right now to say, look, I feel like my assessment is wrong. And, from, I don't remember what the statute of limitations is, but let's say I said my assessment was wrong for last year, then I could potentially get a refund for some of my property taxes. So there can be other assessments that are being refunded, or property taxes that are being refunded. I think that it's, what we've noticed is this has been happening all along, just obviously not to the extreme or to the valley or the volume of what we're seeing with Qasimyar. So it happens actually every year for several different properties or around the county. It might hit every school district in one capacity or another, but it's just never in the significant values that we're seeing that are hitting our GLs because of Qasimyar. Hey, so Heather, I'm looking to see, I don't see any additional questions that have hit the Q&A box.
I don't either. I put in some information. Those of you still on the line, I put in some information in the Q&A, including, and if you let me know put it in the chat box if you can't see what's in the Q&A, I believe you can. I put a link to the schoolsoup.org website. School finance forms is the page where we have our, right there it is, our Qasimyar Q&As and FAQs, I should say, and that accounting guidance that we spoke of earlier is actually posted on there as well. And for those, any district who wants to levy for a cash shortage, one of the documents that we're going to post on that website, on that Qasimyar page, actually includes a calculation for additional values that even after the state aid recalc and after any potential levies from the district, that the district might still have a cash shortage. So we've done some of the initial look at some of those. They're going to be in the documents that we hand out. But EMC team at maricopa.gov for any potential cash shortages. Send in there. We will be posting a timeline for budget docs and information like that we will need in order to present to the Board of Supervisors. Just a reminder, your governing board actually does not have to approve levies for cash shortage by statute, but the Maricopa County Board of Supervisors does. And so we have to do a good job of working together to make sure we can build that clear case that those additional levies are necessary so that we can get that Board of Supervisors approval. Emailing the presentation, Roland, yes, we will post it, we will email it, and along with that email, we will include all of these handouts. We'll try to get it out there as many ways as possible. It's on the website, direct in your email inbox, whatever we can do to help. And if for some reason you don't get it, please don't hesitate to email myself, Annette, Karen, Megan, any one of us, if you have our email address, are happy to send it.
Okay, so that pretty much concludes our information today. Hopefully you all found this helpful. I should also point out, I think Heather, you mentioned this at the very beginning, this webinar was being recorded, so we are going to also post this to the county superintendent's YouTube channel. So if you have colleagues who weren't able to participate and they wanted to be able to observe this and gather this information, this will also be provided.
That is correct. And we'll send out that link with the email and with the handouts. I want to thank everyone for coming today. Sometimes it's hard to get schedules together, and we're grateful for you for being here at 2:00 on a Friday. We do have about 11 minutes left. So if you want to stay for a slideshow from my November cruise to Central America, you're more than welcome to do that. I've got some great pictures of the Panama Canal. But otherwise, please enjoy your weekend. Give us a call if you have any questions anytime.